Hello there, Investorholics and the casual viewers. Today we'll be continuing our series for investing for beginners. Today we'll be focusing on ETF risks and returns. Hang around to get the low down. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, risk versus return. Index ETFs are designed to provide returns that are like the benchmark they track, or typically very close. There's always a small tracking error. When investing in an ETF, investors should be aware that the value of the ETF may rise and fall over time. So we should always keep in mind one of the main principles for investing: the higher the potential reward, the higher the potential risk of losing money. So the rule we should all live by is don't invest any money that we cannot afford to lose. Okay, so risks associated with ETFs. So asset classes generally range from low to high risk, and the following order roughly. So cash, not really much risk associated with cash. Fixed interest, property, and shares. As we all know, the share market goes up and down, and companies tend to go broke from time to time. ETF prices can fluctuate within a wide range, just like the overall stock market. So, you know, the ETFs track the value of the underlying shares. So something definitely to keep in mind is that every investor should consider their tolerance for market ups and downs. And now that the underlying, know what the underlying investments in the ETF are. So, if they're sketchy type investments, definitely the ETF is going to go up and down in value to a greater degree than something that's a much more solid underlying investment. Okay, so ETF returns generally come in the form of income and growth. So growth is just the fact that the share price goes up. Investors can receive income in the form of distributions that are usually paid quarterly or semi-annually, so this is a dividend. Some ETFs even pay monthly. So growth comes from an increase in the value of the portfolio's assets, and that will be reflected in the net asset value, or the NAV, and that should be reflected in the share price of that particular ETF. So finally, we really need to understand currency risk, and that's especially apparent if we're investing in ETFs that hold international shares in their portfolio. So unhedged international ETFs are subject to fluctuations in the value of the Australian dollar, otherwise against other currencies, I should say. Currency movements can impact on your returns because price movements must be converted back into the Australian dollar, resulting in gains or losses. So for example, if the value of the Australian dollar rises, the value of the investment hold in the foreign assets, they'll fall. So it's just like an inverse function, I suppose. So a weaker Australian dollar increases the AUD value of the investment held in foreign assets. Some international ETFs are currency hedged, offering investors the option to reduce the impact of currency fluctuations. So pretty much all the ETF providers offer products that are currency hedged, especially if you're looking at investing in international fixed interest or other type of equity investments. So if you're worried about the currency fluctuations, you should probably look at doing something that is actually hedged. Anyway, guys, definitely have to keep up to date with the risks and rewards when we're investing, even with ETFs. Hopefully this little presentation was useful. Hopefully it added value. Thanks. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.